President Duterte has extended the enhanced community quarantine imposed in Metro Manila and other high-risk areas until May 15. This comes as COVID-19 cases in the country nears the 7,000 mark. This is the third highest tally in the region. That's not that bad. President Duterte has extended the enhanced community quarantine imposed in Metro Manila and other high-risk areas until May 15. Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It's 10:37 a.m. this Friday here in Manila. We're about an hour into our shortened trading day. Let's kick off with our top story. President Duterte has extended the enhanced community quarantine imposed on Metro Manila and other high-risk areas until May 15th. This comes as COVID-19 cases here in the country nears the 7,000 mark. That is the third highest tally in the entire region. Now, the extended lockdown covers major regions in Luzon and new areas in Visayas and Mindanao. This is still subject to change. Other moderate and low-risk areas, meanwhile, will be placed under a general community quarantine with select essential establishments and sectors seeing a partial reopening. The budget, however, may be an issue as the country moves forward with continued restrictions for a second month. Finance Chief Sonny Dominguez said that the government's COVID-19 response has managed to eat up almost a tenth of the 4.1 trillion peso national budget. Dominguez noted the decline in tax collections for the first quarter, prompting the Philippines to borrow from multilateral banks. The finance secretary says the remaining allocation will be poured into the government's Build program after the lockdown has been lifted. Dominguez says that is to reinforce movement in the economy and generate the much-needed jobs for the people. Cabinet members also insisted adequate food supply for the extended quarantine period as initial bottlenecks in logistics were already addressed. Some manufacturers have also started to repurpose operations to produce essential medical goods like PPEs and face masks. The DTI said it is ready to provide low interest rate loans for MSMEs after this ECQ ends. The department is also backing Senate Health Committee Chairman Bongo's push for a Balik Probinsya program, which seeks to decongest the national capital region. The DTI said more incentives await businesses that will relocate outside of Metro Manila. Kicking off with our local markets here on the home front as our PSE index slides by 78.92 points. That is down by 1.4% to 5520.63. This is, of course, following yesterday where we were actually up by 0.5%. So this week has been very, very jittery. We had 3 straight days of losses from Monday to Wednesday, Thursday, finally paring back those losses. But as you can see here, we are back in the red. Now, Luis Lamlingan credits the partial rebound, let's say, of equities yesterday to the fact that we did see the oil prices, or at least crude oil, rebounding. Asian markets also performing better yesterday. But nevertheless, PNB Securities, as Manny Lisbona is saying, investors are still, quote, tiptoeing around the situation. AAA Equities, as Chris Mangon is saying, that the trading volumes were were quite low yesterday. And so as of yesterday, we were actually down 3.4% for the week, and this follows 4 straight weeks of gains that we've seen. So we're going to be checking in whether these markets today will be continuing that sell-off. Now, one thing that we need to watch out for is net foreign selling. The bad news is that has been persisting. That is a 27th straight day of an outflow. We lost 440 million pesos from foreigners yesterday. The good news here is that, as you can see in the right end of my chart here, the outflow is slowing down a touch. So the 5-day moving average has slowed down to $11.3 million. That's compared with the usual 20-day or longer day moving average of around $16.4 million that we've been seeing every day. The bad news is that Asia, as I checked earlier on, was in the red earlier on, and we do follow a very mixed picture in the US as they actually announced several data coming out in terms of their economy. You've got one issue here. You've got Gilead Sciences. They did have an antiviral drug, and they said, well, this is from the Financial Times. They reported that it flopped in its first randomized clinical trial. The drug company has disputed that claim, but some equity analysts are saying that prompted a sell-off in the US. Another thing is job losses in the US are now at 26 million people. And from Bloomberg, their latest unemployment figure for April is around 20% in the United States. Another thing from the US, new home sales dropped 15.4% in March, and the PMI, so the manufacturing index in the US in April, plummeted to 27.4. That is the lowest since at least 2009. More on the markets and specific stocks later on in the broadcast. Moving on to other headlines, we're watching this Friday. As the community quarantines paralyze workers and government funds are getting redirected, Oxford Economics sees the government's infrastructure program getting further delayed this year. The research note points out that the infra push has been slow to begin with. Also, the government's original growth target of 7%, which was, of course, before this pandemic hit, assumes that project implementation rate is at least 50% from its current pace, which is now at 30%. Oxford Economics estimates that infrastructure spending accounted for about 1.2 percentage points in GDP growth. But it's also not just about spending. The think tank says absorptive capacity of government agencies are putting a ceiling to the implementation rate. Now, still, infrastructure spending will be a key driver for growth for this year, and it is expected to pick up again once normalcy returns. But Oxford Economics doubts that the original targets will be reached. But the World Bank painted a bleak picture for remittance flows around the world. That's on the back of the unprecedented number of lockdowns in most countries. But the government says it will not be as bad for us here in the Philippines. The World Bank estimates that the average remittance inflows to low and middle income countries will contract by 13%. But our own Bangko Sentral is much more optimistic than that. They see remittance taking a softer blow of just around a 2 to 3% drop. The reason for that? Well, the country's chief economist, Gil Beltran, points out that most of our OFWs are actually in essential industries like healthcare and education. ING senior economist Nikki Mapa concurs with this estimate, forecasting a 2.5% drop in remittances. And while this is not as bad as it could be for other countries, it will still be a contraction, of course, which he says could drag the GDP growth into negative territory. And as the enhanced community quarantine continues in some key regions here in Luzon, 14 of the country's biggest business groups are urging the government to lower the cost of logistics and implement a moratorium on fees and penalties slapped on shipments stuck at the country's ports. The groups explain that such a moratorium must be implemented and applied retroactively to all cargoes affected by factors like slow bank processing or delayed clearance from the customs. Now, on top of this, business groups are also asking the government to extend free storage period at the ports from 5 days to 10 days. Currently, after the 5-day free storage period, the shippers must pay storage fees of up to 1,400 pesos per day, terminal operators for dry containers, and almost 200 pesos an hour for reefers. So businesses are likewise recommending a regulatory impact assessment on national and local government issuances to reduce confusion that causes the delays on the transport of goods. mentioned, it's getting more and more challenging to get things to our ports, but even more stressful is getting things out of our ports. So we have with us Martin Koo. He is the country head of Ninjavan. Hi, Martin. Good morning. And he's here to tell us what is going on in that last mile stretch. Now, Martin, just to give us a general sense, how is this delivery industry going? Is it a mess right now, or are you actually running things very smoothly?
Hi, Danny. Thanks for having me. So, I think to say that any industry is unaffected or is not disrupted by what's happening in our country is not a fair statement, right? It's not representative of what's happening. Ultimately, I think logistics has been one of the most affected, and most importantly, e-commerce logistics, last mile logistics, we're seeing a lot of disruption. I think there's really two planes that I would touch this question on. The first is the fact that the assortment has been limited dramatically. So, of course, our government has had to restrict to essential goods. And as a result, the kinds of volumes that can or should move has been dramatically restrained. The second component, I think, would be our ability to physically move on the grounds, right? So there's definitely been some chaos and changes in implementation via documentation at those checkpoints, as well as the increasing and loosening enforcement of the checkpoint levels themselves. And then finally, different standards for implementation at the LGU level.
Okay. Martin, can you give us more of an idea on whether the essential goods deliveries, which are seen to be surging right now, are making up for the lack of volumes in the non-essential items? Are you still actually able to receive orders, but albeit in a delayed manner? And what happens after this new extension of the ECQ, actually?
Yeah. So ultimately, I think every courier has to or should be working on evolving to operate in this new environment, right? Conditions are very, very different. I think to address the first part of the question with respect to essentials and whether or not they can offset volume, I don't think so, to be honest. Essentials are shipped normally, and that's always a percentage of what we normally carry, right? But I've heard up to 90% of assortment on key e-commerce platforms in the country has been restricted. So is demand for essentials up? Yes, absolutely, but certainly not enough to offset the overall demand for consumer goods that we experience on a daily basis. Right.
Okay. Do you have any visibility on whether international shipments are actually now returning? And these might. Do you have any visibility whatsoever on whether we can start shipping out non-essential goods, as you mentioned, which take up 90% of the volumes?
Well, I think with respect to international, it's more of a question of how these goods normally move. And with consumer flights massively restricted, there's a massive drop as well in terms of the amount of flights and availability of air freight cargo. As you mentioned earlier, our ports are still quite congested as well. So sea freight is obviously moving to some extent, but there's massive congestion in terms of our ability to clear at the port level. With respect to non-essential goods, ultimately, I'm a strong believer that courier services and e-commerce, more importantly, can and should play a very, very key role in enabling a successful quarantine, right? I often tell my team, I've said this in multiple discussions as well, every courier that we can put on the road is keeping 40 to 50 families home every day. And I think that's extremely, extremely important, both for the public safety of the people, as well as ensuring that our economy continues to move, that not just the consumers can receive goods, but the people selling these goods have an outlet to earn.
Okay. Martin, can you clarify your position on that? Do you feel that you have enough safety protocols in place for your frontline workers to be able to already deliver essential goods right now?
So safety was really the first thing that came to our minds once the ECQ was implemented, right? The minute that we didn't feel safe keeping our bikes on the road, we actually shuttered service entirely. And that was a massive decision for us. With no deliveries, we're not earning. With no earnings, we have no ability to support the business for an extended period of time. So we took that time to really rethink our business and retool how we were operating. I think really two tracks here that I would highlight. The first would be transitioning to a fully contactless model. So we revised all of our SOPs, as well as introducing some technology builds to help enable a smoother contactless delivery flow. The second component was looking really outside our country to markets that were a little bit more advanced with respect to the spread of the disease. And this allowed us to really understand what the best practices were. How can we keep our guys safe in terms of protective equipment? So I'm proud to say that the version of Ninjavan that we have on the road today is one that we're proud of and one where we feel our teams are very well taken care of.
Okay, what about the fact of, cashless payments and transactions? I mean, that is still an issue in this country. We've, had to deal with that right away right now. Is that going to be a bottleneck for these sort of last mile deliveries?
So fortunately, part of what we've baked into our contactless delivery model is a form of COD handling that we think is secure and is quite safe.
Okay.
Also based on, again, what we've seen around the region in terms of best practices. I think with respect to the spread of e-money and the application of e-money payments, this is something that we're also hoping for, right? It helps protect our people, helps keep people safer, minimizes the physical interactions that we have to do. Unfortunately, it's not something that NinjaVan as a logistics provider is in the best position to drive, right? This is more on the demand side. So I would encourage e-commerce platforms to continue to adopt digital payments. I would also encourage our consumers to embrace this and take advantage of this where possible.
Okay, so you're moving with the times, nevertheless, continuing your work despite the fact that there might be some bottlenecks in that space. Let's talk about the new normal and your plans after the lockdown. Is there any way for you to already predict how e-commerce is gonna go, at least for the rest of the year? I mean, it's supposed to be a positive thing when you have a lockdown, more people buy, but at the same time, you've got much lower purchasing power for consumers that have, of course, lost their jobs. So how do you balance these projections?
Right. So the virus isn't simply going to go away, right? This isn't going to be over at May 15 or even May 30th. This is something that our country and the world will continue to deal with for maybe the balance of the year, if not longer, at least until a vaccine or a cure has been released. So ultimately, what we as a business are trying to respond to is how are people's needs changing, right? So certain behaviors that I think used to live mainly in the offline space are now beginning to come online. I think one I would highlight is grocery. So we're very excited about a recent partnership we launched with BWorld grocery stores. They've taken a very forward-looking stance at grocery fulfillment, and we as a logistics provider have been able to come in and serve grocery deliveries on behalf of those that need them most. I think the second component, of course, is how the e-commerce industry will evolve overall, right? Mm-hmm. Ultimately, retail also probably won't snap back. I think people will continue to have issues, both in terms of transportation as well as in terms of fear of crowded places and returning to these mall environments. So ultimately, I think this is a good thing for e-commerce. We have seen in other markets in the region, especially Thailand, who has taken a very positive stance towards e-commerce, that again, this can help enable a successful quarantine. It can help drive the economy. It can help shift behaviors online. So we're gunning to really prepare ourselves to participate in that uptick.
Okay, tell us more about those partnerships, actually, because how do you differ, for example, and how do you position yourselves? What's your competitive advantage compared to other logistics providers, last mile providers in particular?
So NinjaVan is really a technology-first business. We're a very young company. I started the company here in the Philippines just under 4 years ago. And in that time, we've been able to grow to a massive footprint and a leadership position in the e-commerce space. None of that's possible given how landed and entrenched the incumbent market is for logistics. None of that would have been possible without the use of technology. So the way that we apply technology in our business is really to allow us to make smarter decisions and have better visibility across our entire network. So traditionally, we've applied this technology to allow us to be faster, to make better decisions about which parcels to move, how to move them, in order for us to offer the fastest and best service quality that we can. Now it's been about resource efficiency because so many lanes are blocked. Even manpower as a resource is restricted due to the tight closures in certain areas, as well as the fact that many people are still afraid to get back on the road. So ultimately, this has allowed us to make smarter decisions about how we can be more efficient with the resourcing base that we do have.
Okay, and finally, your future plans. Which areas in the Philippines are you planning to expand to? Where are you operating right now? Your target numbers, let's say. Are you going to be moving into food deliveries and other such things? I don't know, healthcare services, deliveries, and things like that.
Right. In terms of coverage, entering the quarantine, we were covering about 95% of the population. So we're very, very proud about the footprint that we have. Inclusivity is a massive advocacy for us. We really believe in connecting the entire market through e-commerce. And I don't think that we would stop until we can try to reach every Filipino in the country, that everyone can be connected to e-commerce. With respect to new service lines, this is something that we're really very focused on as well, and always trying to pay very close attention to what consumer needs are and how we can better respond. The grocery project that I described to you a few minutes ago is a good example of this. We recognize the need and a willing partner, a very advanced partner in the form of BWorld. I think other examples that we're also looking at would be things like medicine and healthcare. Obviously, this is something extremely, extremely important. And our drugstores are equally hard to reach for some people without public transportation. So
Okay.
yes, more complex lines like pharma, for example, would be something that we're also thinking about.
All right, so the new normal, groceries being delivered, not just that, but also your drugs and pharma, hopefully very soon. Finally, just to close on your program, you guys said that you've been helping the country in terms of its fight against this pandemic. Just a few words on that.
Sure. So especially with e-commerce running at such a depressed rate and us being very eager to find opportunities for our guys to work and earn and support their families, we looked out to our government and to various programs that were interested in providing relief. So we're very proud of the program that we ran with the Office of the Vice President. We helped deliver the initial batch of test kits to the RITM and continue to provide some vehicular support on that front. We also worked with the Pasig City government to help deliver bikes on behalf of our frontliners, such that our frontliners could commute to and from. So our team was very, very proactive about finding these opportunities to help, and NinjaVan is committed to continue to find ways to support throughout the quarantine.
Okay, thank you so much for those updates. That was, of course, NinjaVan's country head, Martin Koo.
Great, thank you.
Okay, quick check on the markets before I let you guys go. Let's do a quick check on BPI. They have just released their first quarter earnings. Let's take a look at that. So first quarter net income down by 0.05%. That's to the tune of 6.39 billion pesos. And actually, that's on the back of revenues, which were up by 11%. To 25.26 billion pesos. So we actually saw double-digit figures in terms of their first quarter net interest income, up 13%. But when it comes to the trading gains, non-interest income, that was actually up by 5.8%. So single digits there. Total loans as well, single-digit growth at 7.3% to 1.45 trillion pesos. And very importantly, they have set a loan loss provision amid releasing these results of more than double what they had initially set. So for the first quarter, they're setting a provision of 4.23 billion pesos for loan losses. That's compared to 1.8 billion pesos a year ago. Now you can see on my terminal here how BPI stock has been reacting to that. That is down by 1%, just a little less than how the markets have been performing so far. Note that Cesar Consing, he is of course the head of BPI, said that banks must prepare for rising credit risks, saying that the Philippine businesses, particularly the small, medium-sized enterprises, are adding considerable stress. But he did say they will continue lending to these small businesses and also reallocating resources to technology. But he does say in general, the banking industry here in the Philippines is in a very good shape or very strong shape. Now, moving on to Ayala Land, because this is another sister company that has made some announcements on their plans going forward. And it's the same sort of risk of sentiment that we can see in Ayala Land here, with CFO's Gus Bengzon saying that the 2020 capex has now been reduced to 70 billion pesos. That's from the original estimate of 110 billion pesos that they were supposed to be spending this year. So they will not be launching new projects this year. They are rationalizing their potential investments, but they did say that they believe they have sufficient projects in their pipeline, especially once the situation normalizes. They launched around 160 billion worth of projects already last year. So basically just pouring their capex into that. Apart from that, they had announced several expenditures on the back of the COVID-19 pandemic. For instance, 2.6 billion pesos going to rent condonation for their merchants, 600 million pesos given to their contractual workers. And also they did mention that 90% of office spaces are still operational right now. Meanwhile, just a quick check on their parent company, Ayala Corp. Before we wrap this broadcast up, they actually also spent 5.5 billion pesos in terms of the pandemic. And take a look at Ayala Corp, which is actually bucking the sell-off right now. It's up by 0.2%. The Ayala Zobel brothers rather had said that the pandemic will be forcing them to look into technology and digital platforms, including that of BPI. So a very quick peek on how our markets are performing and seeing whether we have actually extended those losses or are paring them back. We are down by 1.2%. We had opened lower earlier on, so a bit of strength on the back of that. But as it stands, we are back to 5,500 levels, likely to be seeing a loss for this entire week. And that's a first look into the business day. Today is Friday, April 24th, 2020. Catch us again on Monday at 10:30 a.m. Thank you so much for watching. Have a restful weekend. I'm Danny Laurel, and we are One News.